Markets plunged Friday after the White House said Russia could invade Ukraine any day now, including during this month's Winter Olympics, a prospect that led panicked investors to dump stocks and caused oil prices to surge to 7-year highs. The Russia-Ukraine tensions have hovered over oil trade. Investors have been counting on a diplomatic resolution, but recent developments indicate this may be wishful thinking and therefore, not fully priced into the markets. Several aerospace and defense stocks rallied on the Ukraine news. Northrop Grumman jumped nearly 4%, while Lockheed Martin rose over 2%. Worse than expected inflation data, coupled with fears about the Federal Reserve tightening monetary policy too quickly and sending markets into a tailspin, has put pressure on tech and other growth stocks while causing government bond yields to surge. The 10-year Treasury note briefly jumped above 2% on Thursday, its highest level since August 2019 and up from 1.5% in December. Stocks have largely struggled for direction so far in February, moving slightly higher after last month's widespread sell-off, which was the market's worst start to a year since 2009. January's red-hot inflation reading now has many experts predicting that the Federal Reserve will need to move more aggressively in tightening monetary policy. Investment banks including Bank of America and Goldman Sachs are warning clients the central bank will likely raise interest rates more times than forecast in a bid to combat the surge in consumer prices. Some experts now predict as many as 7 interest rate hikes this year, far more than the 3 rate hikes Fed officials originally forecast in 2022. You can't minimize what today's news could mean on that part of the world and the people impacted, but from an investment point of view we need to For instance, after JFK was assassinated in November 1963, stocks went on one of their best 6-month runs ever,